Now let's get right to Lee Munson, Chief Investment Officer, Portfolio Wealth Advisors. It's great to see you. Thanks, Lee, for being back on the show with us. Tell me about your overall market themes now. Are you seeing more tailwinds or headwinds as we're hitting some new record highs today?
Well, I think that we talk about new record highs, but then we also don't want to talk about the reflation trade that is completely corrected. If you look at things like commodity prices, still tremendously priced upwards from last March, but it's come down quite a bit. If you look at iron ore, there's a fear that China is going to slow down significantly. There's a fear that lumber is going to go to zero. I don't know. I don't think that's going to happen. So what I like to do is I look at things that have already corrected. Emerging markets, they were correcting in February, and now with this China scare, you have to think to yourself, do you think the Chinese government is really going to cause economic shock versus a little saber rattling? They've done the same thing in 2017, so I've been in this game before. And then you also look at gold and gold is a metaphor, right? It's a metaphor for looking at real rates. We still have negative real rates. And if you look at the price action in gold today, you really have to think somebody has some strong opinions about what's going to happen in Jackson Hole this week. So I think there's just confusion about the reflation trade. I know that Delta variant in Afghanistan is pushing hard right now, and that's what I would consider a little bit of headwind right now. But when you look at the valuations, and you look at what you can buy earnings for in the small cap, the cyclicals, what you can buy earnings for in emerging, and even some oddball, very speculative things like the sort of the broader marijuana or U.S. cannabis industry that's trading at like 8 times 2023 EBITDA at 25% growth. You kind of have to think there are already things on sale, and if you want to make money in the market, sometimes you got to be out of consensus. And that's, that takes some courage.
I love how you talked about that. I know you were saying that, looking at those areas, MSOS is maybe fun investing. Maybe that's for the money that you might be willing to have some volatility or even be willing to lose. It's not your safe bet, MSOS. I know that you talked about some other things, if you had to put real money into a lockbox to put to work, you're saying you should be buying some stocks at this point, right?
Oh, yeah. I just want to buy the things that have a precedent of doing well post-recession, that have a precedent of doing well when we have negative real rates, which my thesis is that's going to be persistent through 2023. What's the Fed going to do? They're just going to hike rates to get a real positive yield? It's impossible. I mean, we're going to have inflation go all the way down to near zero to get a real rate of return. And so when you look historically, what is done best in that situation? And you're looking at the cyclicals, you're looking at small value, you're looking at even large value. You're looking at things like gold. If you really want the hot gold trade, you look at GDX, which is, a way that you buy the basket of gold miners. I think that's sort of the proxy. So if you want to commit money today, there's plenty of places with reasonable average or below average valuation.
Right.
And as the shine comes off of large US growth, and we start to see more quarters where there's evidence that we've pulled earnings forward, and this idea that Delta, are we just going to live with COVID for the rest of our life, or is this a short-term hiccup? I think it's a short-term hiccup. I think the Fed's going to stay low for longer, and that's going to mean real yields are going to remain negative, and the government is going to continue printing money. Where do you want to invest? What do you think? The cyclicals, the industrials, the materials, the banks. And then, of course, if you really want to lock it up and have a super low valuation, you go into emerging markets because, again, people are going to start looking at valuations as we get farther away from warp speed earnings to just high single digit, which in the old days used to be pretty good.
You were saying that emerging markets just looks too low, too out of favor to even overlook. Like, you got to look at it. I understand what you're saying when you're coming from that with that. Tell me more about some of the other names that you were naming, such as Viacom and Discovery and Disney. Would those go into some good place going forward for maybe a longer term investment?
I think so. And really what those represent is that you have an exogenous crisis. You have some crisis, really, with the Viacom, the Discovery. that was from, the Hong Kong whale, as was all the news a few months ago, where there was a dude who lost 20 billion bucks in a couple of days, and it crushed those stocks by over 50%. So, you look at Viacom Discovery, those are the underdog cheap ways to get streaming, right? And they're cheap for a reason, because everybody got burned on it earlier this year. I was looking at it post blow up. I love to find blow ups with reasonable companies. Disney sort of a similar thing. You got the Delta variant leaning on theme parks, but that's the way you get Disney streaming. That's the way you get Hulu. And it's also the way you get all that money flowing in once we open up again, which we're already opened up. So I think if you can buy Disney in the low 170s, I like it. I was buying it all the way at 100, 120 last year, just for sort of speculation if you needed an individual stock. But I think those are three names that you can look at and say, it's a cheap way to play streaming. It's a cheap way to continue on with the trend. And also, it comes attached with a sales coupon that have nothing to do with the underlying companies. And that's I think, the best way to approach value.
Lee Munson, it's always great to see you. Thank you very much. Lee Munson, Chief Investment Officer, Portfolio